Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It is, hi there. Hey, Giannis. We wait until 12:30 GMT today. Yeah, is it 12:30? Yeah, I guess what's interesting is we're going to get an employment number. I am alive. Yes, I am alive. We get some type of I guess there's a third employment number looking at the gross amount of jobs outstanding. I think that's what we're getting today at 10 o'clock our time. It's 8:31 a.m. now, so it's an hour and 29 minutes from now, and so we get we get that, and that should be very interesting. We'll see. See how that plays out. I think they're looking for 10.35. I think that's what they're saying. We'll see. I think sometimes you can press too hard to try to get a general idea of employment and so forth. In the sense of, just take the Labor Bureau statistics and just keep on following them. I think that's what it really comes down to, honestly. There's shenanigans that have gone on. During the Obama years, they changed the way they do it, and it's never been changed since. So the numbers are really, really low. They kind of subtract out stuff. I would say there's a fudge mathematical factor in there that's always been in there before Mr. Obama. They've just kind of reset the starting point, that's all. So let's see what's going on this morning. Where do we go from here? Let's see. Let me cancel that out right there. You see the dollar index. You can see the dollar coming down a little bit there. Same thing over on Chicago Quant right there, coming down a little bit. We are in that weekly on the third week now. You see we are 3 days in a buy, and it's kind of pulsating slow and steady, Metho! Good morning, good afternoon, and good evening. So, there's a lot to be said about it all. We got a great story today about copper. It was in Zero Hedge overnight about the Chinese market. Very fascinating. It's always, we don't get a lot of statistics out of China. We get a lot of lip service out of them, but we don't get a lot of statistics. So it's always interesting when you see actual, and I say this a lot, when you actually see data, actual real data that they can't hide, that it has to be spilled, because it has to be told because, they're declaring bankruptcy or they're, asking for bailouts and, things like that. That's real data, when you look at that. Or sales have been stopped by foreign producers because they haven't had any payments. That's real data. That's not the we are the second largest economy in the world type of data, which is, kind of odd to begin with. We all know the second largest economy in the world is the European Union. Why no one will say that out loud on a financial channel seems really odd to me. I mean, we've gotten to the point where we're a bunch of scaredy cats anymore. But anyway, that's the way it rolls. So there's the dollar. You can see the dollar is relatively firm towards the high end of its range. You can see that right up in here. And the same thing over on J4X. You can see we are definitely at the high end of the range in this thing right there, with no problem whatsoever to even remotely doubt that. We do see good action in the euro today. We see also at the same time we see crude oil kind of flipping, flopping, just hanging out. Let's say it's at the higher end of the low range. Boy, talk about trying to be tricky with words. We look at crude oil and we think it has basically a range between like 90 and 115, and it slips a little past it on one side or slips past it the other side. And we've gone down to the bottom side of it. We've dropped under 90 at times. We've been in the mid 80s or high 80s, and now we're in the low 90s or mid 90s. And so we see that going on around the world. We see, here's something interesting that I found really fascinating this morning, that Norway has become the number one gas producer now for Europe and pushed Russia out of that position. So that's a very positive sign to see. They still, they say that they can produce the quantity that they're producing all the way up to about 30 years from now. Oh no, I'm sorry. till 2030. So over the next 7-8 years, or was it 30 years? It might be. Maybe it was 30 years. They can produce this amount for at least another 30 years, I think. So either way, we'll take to 2030 or we'll take 30 years. By then, I'm sure things will change dramatically for the better. For the better, not the worst. Let's see now. What else we have to talk about before we really dig into these things with the dollar? Well, that's about it. Let's roll along to the euro and see what the euro's up with this morning. Saw it in the buy yesterday. It's in the buy again today. Still in the weekly sell right there. It's having its issues. It's playing the low end of the range, bouncing between what's that? There's a low right there of 99.52. We have a low right there of. Did you see that 99.52? I think we did. Yeah, you saw that right there. We have a low here of 99.005. That one's 99.10. 2 days ago was 99.14. So, it's kind of hanging around the par area. Everybody was looking for par. They got par. And now where do we go from there? I would assume just sideways until, we're seeing, as we mentioned early yesterday morning, for those that didn't tune into the yesterday webinar 3 hours earlier, we're going to try to do that once a week where we do 3 hours earlier just to help out those on the other side of the planet that have to be up at 1 or midnight to be able to listen to us. It's better for them to hear us at 9 o'clock at night instead of 12 o'clock at night or 10 o'clock at night versus 1 in the morning. The one thing we spotted yesterday about the what was I talking about? Oh, the dollar and the euro and oil. We saw that the I had lost my train of thought. Gave too much of an opinion about time. It'll come back to us in a few seconds. End result, you can see that the euro lifting. That was what I was talking about. And we were talking about yesterday's market, where what happened in yesterday's market that I talked about? I saw something going on in there. What was our title? Let me think what the title was yesterday. What was our title? I'm trying to think what the title was yesterday. Let me look on the Dukascopy here. What did we give as a title yesterday? I think that's what I was thinking about, the conversation of yesterday and the values of the stock markets and so forth, how they're bouncing and trapped, and they don't really, they're following these labor numbers. I was going somewhere good. I can't remember where it was, but I'm sure it'll reappear in the head a few seconds from now or a few minutes from now. So we'll just keep on following the currencies and let it spill out of my little brain. All right, so there's the euro. Let's put the euro up on the J4X. There we are. That's not it. The euro on the J4X. Right there. And so that's bouncing around the bottom end of the range. We talked about par. Everybody wanted par. Where did I leave off from there? That's what I was talking about. I got from par to... I forget where we got from there. Oh, it'll come out. All right, so you see the euro just trying to lift up, and it's hard for it to get going. There's not a lot of energy in this market. I think, overall, just the way it has been, they're not being able to get any grip, any confidence. There's no conviction. The markets for 4 months now have had that look like they're just waiting. They're sitting to the side and waiting. And as we watch this euro bounce along the par, it's not really rolling over like viciously. It just isn't going anywhere with any energy, and we see that everywhere. Now, when we looked at cable this morning, you see cable was just drifting in that same fashion, and even a little bit lower. It made out new lows from this low here. And we're in the weekly sell again, 3 weeks there also. Looking on J4X, there it is there. Making easily showing it that it's beyond the last low compared to, we'll just throw the euro up there again, where as you can see here, it's not doing that at all. It's generating, it's lifting itself a little bit in there. So the currencies overall, the dollar's staying very firm. Bond markets are kind of slicing on a slow drift. Interest rates are rising very little. At the same time, Europe is trying to find. It was an economic thing about Europe. That's what it was. I know. It's starting to come back to me. And Europe is trying to get going, and that's what it was. Is the equity market selling off over the last 3 trading days? Friday of last week, Monday, it was sideways all day until the end of the day, and then today it's up. The stock indices are up, mainly from Europe raising its rates. That's where I was headed, and so we're seeing and what's interesting is Christine Lagarde. I mentioned it yesterday. Christine Lagarde said they were looking at doing this in September. So we said this in a webinar months ago. She said that she was interested in raising the rates in September. We just thought she was doing the Draghi thing. Where he would say things like that and the markets would follow him and then he would never do it. But they're pricing in now, and that's what we talked about yesterday. Europe is pricing in short-term rate increases of 0.75 of a percentage point. So they're going to throw a couple 0.75 at you on the continent there. And that's, kind of a little wild and woolly thing, since Europe itself has been, as I made the joke yesterday, Europe has been buy low and sell lower, whereas in the States it's been buy low, sell a little bit higher. And that's really where my mind had gone. And then I mentioned trying to do an early webinar at least once a week to help out people who are stuck in getting up or watching the recording and not having a chance to ask questions. And that's where my mind was at. I thought it was very fascinating that they're pricing, the European markets are now pricing that in, and that's the pressure we're seeing in the stock market. Let's just bring you to the stock market real quick. And there's the S&P 500, and you can see it's trying to lift up here today. And you can see it's lifting through here. And we were yesterday below the weekly, and that has disappeared altogether, and we're back up on the plus side of it. And so, this sell here on Friday was the European Union realizing, oh, darn, we must raise rates to straighten ourselves out a little bit here. And that's probably the beginning and end of it, really, when you think about it. I don't have a lot of confidence that they're going to do too much, but one thing is for sure, they need to do something. They have to look like they're caring. And I mentioned it yesterday also. They have to do it because they'll get sued by their investors if they don't. Because a lot of these hedge funds and mutual funds and so forth in their incorporation mention inflation and what they will do during inflation. If it's to buy silver or gold or to put on option collars around their equity or whatever it is, they have to go do some of it or they'll get sued. And I have mentioned here, one of my sons works for a law firm, part of the portfolio team, and they go sue funds and institutions when they don't follow their manifesto. They actually do, and they make money out of it. Would you like to look at Marriott, the stock? Sure. Let's check out Marriott. Have not looked at Marriott in a while. I used to trade Martin Marietta, and that was the rocket company. And then, and I think we had. Would you believe? I think we had the options for Marriott hotels on the same trading floor. I remember that it was like, which Marriott you're going to? I'm going over to the Rocket. Oh, okay. You get an order, and it's like, which one are we doing? Okay, there's Disney. So let's put it in Disney's spot. And let's find the symbol for it. And I got to find the symbol. Do you know what the symbol is? I'm going to go look it up real quick here. So how you doing, Jordan? Keeping busy? Working hard? Or hardly working? Let's see. We're heading there. We're looking for the symbol for you. And the symbol is Mar. Yeah, that's it. Okay. Oh, they have a couple of them out there. They have Marietta Vacation World Corporation, and then they have Marietta International. I think we used to trade Marriott International. I think that's what it was. MAR. So let's put that in. MAR. Look up. Smart. Not there. No. Nope. Not there. There it is, right there. And here it comes. All right, look at that. That's interesting. Whatever. Disney was lifting at the same time, and so the weekly buy is right there. Isn't that cool? Same confirming there. Interesting how it follows Disney on some way. I guess it's because it's a vacation type thing. Entertainment, you know. Let's widen this out for you a little bit. You see the buy signal there. Just have to add a sell signal there. And then we go with a buy signal there. Get a two-day little jump there. That's not bad. And then it goes back into the sell 3 days ago like that. Now you can see this is a pre-market right now going on. They're trading it. Where did it settle? Yesterday it settled at 55.72, and in the pre-market they're trading it at $58.80. So they're lifting up. That's with the Dow Jones Industrial Average lifting up. You know, getting into the buy there. Yep, MAR. So there it is. It's interesting. It follows the pathway of Disney. Now you can see there, it got into the buy much ahead of Disney. All these lines were Disney because it was in Disney. It was in a buy there, slid into the sell, and it didn't do much, did it? It went into the sell here. Let's put that in there. And literally, it sold down the next day and came back at the end of the day and went into a buy, and then you caught this nice ride. Well, we were in a weekly sell, so it was very hard to get going until when it jumped across it there at that point. And that was an interesting ride. Notice it, as it gets through there on that week, right there, we start to really get some buying going on. Interesting stock. Moves in some nice clumps, you know. You can see, like right there, it goes into a buy right there. And catches that nice ride right there. I'm just going to jump around and we'll look at it a little bit. You see it goes into sell, but we're in a weekly buy. Now look at that. Disney went into the sell here, and Marriott started to slide down, but nothing major, you know. Well, I guess it is major. It went from 80 down to 60, so it is kind of major. And it was in a daily sell from here. Let's put that in there. Right there. And that was what, in April, at the end of April going into March. I caught that ride there. But we were still in the weekly here. Still in the weekly buy. I think we should try a 3.5 and see what that looks like. Let's do that. Let's put a 3.5 in there instead of the 5. Remove. Yes. Add. Let's see what the 3.5 looks like. I would imagine that's better. There it is right there. There we are. Oh, that's a little bit better, isn't it? Well, it catches this one. Catches this nice dump right there. That was interesting. But the sell, the daily sell, keeps you in this. Let's move this up like that. The daily sell keeps you safe, but it doesn't make you money. Okay? So in other words, you might have sold calls against your longs, but you didn't get short, and then, it compensates. And then after a while, then you can see, you get in. Let's move that and go like this. The weekly, you gets into that weekly right there. And then you can see, I mean, look at it. It's pierced both the manifold and that. And definitely is going to be a sell at the end of the week there. So you know that it's pretty safe and it's a good bet. Look at that. A day and a half later, they roll over pretty big. And then they start to do their buying thing. We got into a buy right there. After that interesting slide all that time, you would buy back your calls. If you bought some puts, sell those too and watch it go back up again. That's interesting. You can see it's trying to get through. It never gets back into the buy though. That's interesting. Right there. It holds. It still holds into the sell. The longer term money knows that they want to take it down again. That's what that weekly is really. It tells you when longer term money wants to go. You know, you can see this. It puts that hump in there, and then totally fails. Gets back into the sell right there. Is it? Let's see right there. And it rolls over in the weekly sell. And what a nice safe 170 all the way down to 130. $40 drop over a 3-week period. Wow. Pretty cool. All right. How's that, Jordan? We'll look at any product you want to see. Be it a currency, be it a stock, be it a commodity, you name it, we'll look at it. Metals, oils, energies. We're very happy to look at all of them. Mm-hmm. All right, now let's see. Natural gas on J4X. Okay, let's see what that looks like. We just dropped the September contract today. It disappeared. It expired. So we're looking at October now. There is U.S. natural gas right there. We're down to 9.10. We went up and danced up to the $10 area. Let's see what European natural gas looks like. Right there. Good. It's off to almost the 30 area. That's good. It's down to 28.57. I think that Norway story this morning is going to be a help. And I really, you know, I just don't understand. We have all the ability in the world to smooth all this out with exporting U.S. natural gas. And I don't understand why we're not. You know, natural gas could really get whacked price-wise, even in Europe after the November election. If they get enough power out of it, they could start exporting natural gas. You know, the Congress can pass laws to export natural gas. So, but yeah, at this point in time, that's where we sit. Ooh. All right. So, from there, what else we got going on natural gas-wise? I guess that's about it. But it's nice to see it trying to move back down again. I couldn't believe we were threatening 30 again. It's like, are you kidding me? It's like, you know, when I know we have all these resources, somehow or another, politicians are stopping it from happening. Nikkei 47. Good morning, good afternoon, and good evening. Let's check out the Nikkei. I would think it's doing its little bounce thing the way the U.S. market is doing. There it is right there, September Nikkei. Yeah, see it is doing the bounce. This needs to get going though. And we are still in the weekly. We're in that weekly buy now. 2, 4, 6. This is the 8th week. Pushed it into the sell there. Did that sloppy Thursday thing, and then Friday smasheroo. Who's afraid of Jackson Hole, huh? I told you there was a lot of noise right on the edge of that Jackson Hole. No wonder. Well, I was talking about it for over a week. You know, markets really confused themselves. They're really saying here in the States, you know, the voices I trust are really saying that this is a European thing. this sell-off, the Jackson Hole situation, and that's really where we're at. Whereas the U.S. Matter of fact, I was listening to an analyst this morning that I trust, and he was saying that earnings hasn't really dipped yet. So, money managers usually move stocks, get rid of them or lighten up when, hey, David, good to see you. I sent it over. I'm glad you got it. Yeah, the where was that? Oh, yes, the stocks overall. Let me just make this pretty clear for everybody. The mother's milk of equity markets, stocks in particular, is earnings. As long as they have solid earnings going on or enormous cash flow, they're going to be bought. Like 9.9 out of 10 times. They're going to be bought on some level. But are they going to be sold hard down? Not normally. Not even close to normal. Not even, very low percentage there. And so, even with this recession kicking in, and Mr. Biden trying to interfere with buybacks and so forth, changing laws, for the companies. Like a company will do this. I know that we're drifting a little bit here, but what a company will do is they will invest their money in what they trust. I always say, people ask me, how do you invest? Buy things you know. Buy things you trust, things you can see. Something you've been watching and learning about or knowing about for years. That's usually a safe thing to go after. In this case here, we're in recession. Looks like we're going to have a third quarter in recession, but we're not seeing companies' earnings drop because they're benefiting from the inflation right now. They're reducing the size of the product that they put out in the package and charge the same amount. And so we're seeing that adjustment for the natural inflationary situation. So, when you see the stock markets make a break the way they have, and then you see a lot of the selling coming in from Europe itself, then we know that, they have to start participating with their incorporated manifestos. If they don't, they get sued. And so it's not that magical, really. So in this case here, stocks, when you really look, like here's the Nikkei, and let's tighten up the Nikkei. You can see the Nikkei, going back to July, and those lows in late June. This is not, they're not even remotely close to those areas. It's the same thing with the S&P 500. Here's the S&P 500, same situation. When you go back to June, and these lows in here, we're just kind of cruising around up in here. No doubt they've made new lows here where the Nikkei hasn't. And when you look at the Dow Jones Industrial Average, go back to June, you can see they made their lows here, and they're doing the same thing here. They're breaking these lows, and we're watching that. We're still in a weekly buy through our mathematics, and you can see the success or failure of our work every day when you tune into this webinar, solely because we live and die by our numbers for the last 45 years. And so it's relatively easy to do a webinar when your math is right 8.5 out of 10 times. Sometimes we get as high as 9 depending on what's going on. And when you combine the weekly, right down here, this is the weekly algorithm, with the daily algorithm, it makes life even easier for us trading. So we're not seeing earnings drop. We're seeing, some pressure from Europe because of the 3-quarter increase they're going to see. Look, you couldn't get Draghi used to come on, the former president of the ECB would come on and say, I'm going to do this, I'm going to do that. The markets would react. And then he wouldn't have to spend any money. He would just say it, and that was enough. And now that Mrs. Lagarde has taken over his position as a president of the ECB, she tried to do somewhat of the same thing, but she had to raise things by 0.25%. We've seen Europe, as I make the poor joke all the time, Europe likes to buy low and sell lower. And now the bonds are all starting to see actual pluses. In other words, you buy a bond in Europe now and you actually get interest. For over a decade, you bought a bond in Europe and you paid to buy the bond. Not only did you buy the bond with your money, but you had to pay interest. You paid interest to own the bond, not Europe paying you interest. So, when you look at the markets overall, and the equity markets in particular, there's not a lot of damage going on here. As much as you would say, "Oh my God, we dropped 1,100 points." It's like, yeah, 3% drop. Okay, it happens. it's noise. I start to pay attention. I always say that here. I pay attention when they finally drop something 3%. But if they drop it 1, 2, 2.5, I'm not really that enthralled about it. I just watch it. I know it's trying to, get some power to it. Now, explaining some of our math here, I don't think David's ever seen this stuff. Let's see. What's Robin say? Robin says new Greenland ice sheet gained 7 gigatons. Yeah, mass in just one day yesterday. The largest daily gain ever recorded during the summer. Yeah, also the Antarctica is picking up more ice also. We are at a 100-year low in temperature. I don't know why. I watch the NASA maps, from NASA every month, and they show that the temperatures in the world are dropping for the last 100 years. But for some reason, Greenpeace and all these environmentalists put statements out claiming the opposite, and they actually take the colors out at the same time, which is amazing. And and that's a wild thing to see, and a wild thing to do, is see the math always being lied about. Now, in this case here, we're talking about our math. When something gets through the zero line, in this case right here, and it's a green or no dot, it's a buy signal. Notice it goes up in value. And vice versa. When you get a red dot or no dot, and the histogram and the green line are below the zero line, like right here. Can you see that? Let's do this. In fact, we'll make it larger for David, because I know David's new here. And where was I looking at? I was looking at like right here, and you see the pressure goes on it. Or here, the pressure goes on it. Or in this case right here, the pressure goes on it. Not a big move, but then again, when you look at the weekly and you try to use the two together, which is what we recommend, then you can see we're in a weekly buy. So we're not trusting that sell. Now we're looking at buys more. So we look at, you see and when you get a red and a green, it's telling us action is coming. And so something like 8 out of 10 times it's telling you a good action is coming. And if you get the buy signal the next day, you go, okay, yeah, I'm going to be long, and chances are for the next couple of days it's going up in value. In this case here, the S&P went from 32,567 all the way up to 808. No, I'm sorry, 887. So what did it do? It went up 200 points on the 275 points in the Dow Jones Industrial Average from that signal. And that's how our math works. So I hope you get a chance to just look and see and tune into the webinars, and we'll gladly show you, how we think about investing and trading and the logic of all of it combined together. And that's what the bottom represents right here. That's the weekly quant. That's why I put in there weekly quant, and this is the day quant. And then the dots are my indicators from the old school way I used to do math. And then when we go over to our J4X chart right here, you see we do the green line dropping under the dashed line showing weakness. We look at these are called Hinky-Ashke bars. They are an average of the open, high, low, and close. And then I think they divide it by 2. And I guess they multiply it by 2 in this case, because it's always bigger. And so then, and that's what we do. We watch them, and they correlate about 68% of the time. They correlate with our dots. So when we get into a big run on the green, you see the green line coming through. You can see at the same time we have lots of green right here. Is that the same product? No, that's natural gas. So let's get natural gas up there, just to show you the correlation. And right there, Nat Gas October. So when we go and look at here in what is that? That is August 7th. We go over to here to August. There's August 9th. There's August 5th. There's August. I guess August 7th. Yeah, there's 6th. And you can see that green move there. You can see the green move there, like that. I hope that helps you out there, Dave. And just kick back and enjoy, and we'll slowly just disseminate concepts and ideas. And there are no stupid questions when it comes to money and trading. There are only short answers or long answers. Okay? Yeah, Robin, that's a good catch. I'll tell you and you know what's interesting in the Antarctica is that the volcanoes have kicked up, the underwater volcanoes have kicked up, and they're gaining ice at the same time. It's a wild, wild world, and we understand it. That's the fun part. Okay, from let's see, that finished off Janos's question about nat gas, and that finished off Jordan's Nikkei and Marriott. No, it was 47's Nikkei and Marriott for Jordan. So we've looked at those things so far. Let's go back to the currencies. Unless someone wants to see something, we'll start. Where did we leave off at? We left off at the British pound, or the Great GBP USD, Great British Pound against the dollar. The cable trade. You see the pressure on that right there. Let's drop down to the Turkish lira. See what Turkish lira is up there. We're going to go to the euro today on that. Now that I see that it's up, the euro against the Turkish lira, you see the strength for the last 4 days, and it's trying to pop. And we're in the weekly buy now for 7 weeks. Let's take a look at the dollar one. The dollar one acts like an index. I say that every day when we talk about it. And there it is, and it's still hugging the 18 area. I think it's all-time highs again. That's the all-time area. We've been in a weekly buy, and this product, it's an insanity. This product does it all the time to us, too. It's been in a buy since mid-February, down in the 13s. Now it's trading in the 18s. I mean, it just refuses to go into a weekly sell. And every time we get a daily buy, it's definitely a winner chicken dinner. You can see we slid into the sell for one whole day right there, and then bang, right back into the buy. And that's why we put the little green dots in there, just to remind you it has slipped through the buy number or the sell number there. And we do the same thing on the weekly at the same time, David. We show if it's slipped into a weekly buy or a weekly sell. In this case here, went into a weekly sell for a couple of weeks back in January, and it tried to go down, made a new low there, but it didn't have much life to it. It slid back into the daily buy, and then went into a daily sell about a week later, and then it jumped into the weekly buy and has not looked back since the week of February 10th. So in that week they went into a weekly buy, and it has stayed there. It just refuses to go down. Now when we go back to the euro Turkish lira, it trades more like a currency. I mean, you can see that they're definitely using it, the supply and demand and so forth and so on. You can see it goes in and out, and, it goes into a sell here from the spike, and it goes sideways and down for a while, and there's your daily sell right there, and then it fights its way into a buy, goes into a sell, and then flips back into a buy, and we are trying to get back into the buy in here. You can see that, so you don't try to take that short, and the next thing you know, it's a winner chicken dinner. And if you did take the short, it's still a winner chicken dinner. So what else can we say about that? I guess that's about it there. Let's jump over to Canada. Oh, Canada. You see here 3 days in a buy, and it's been pretty much sideways. Slid into the weekly buy last week. Normally, I have to say this, on average, normally when Canadian, and we're going to throw this up on J4X, normally when Canada is in a buy, usually oil is going down in value, but you're not really seeing that. Let's throw it up on here. Let's put Brent up there, and then we can take a look at American oil too. See, it's been going up, so we're not really seeing the selling in oil. Oh, I guess we are. Look at that. Okay, the Hinky Ashki is hiding it over there on the J4X, but you can see we are down. Okay, and so what we really should be seeing with it going down is, yes, the Canadian should be moving up, and that makes a lot of sense there, and that's where the pressure is. Now we went into the buy there yesterday on a daily, and we've been in the weekly buy since down here in the high 80s, and we got ourselves a nice little pop out of that, and that was okay. And then we slid into a sell for one day, and then they jacked it back into the buy, and now it's just being rambunctious, being very aggressive there. You can see that. We are in the weekly buy, so maybe that pressure is going to keep on coming, and the odds are 8.5 out of 10. And this is still, look at that. Even so, even with it trying to sell down from a lot of that action yesterday, we're not there. I mean, it's down a couple bucks. it started off in the 97 area. It's trading in the 94 area, and it's still holding on the daily. It's not backing off. And if we get some strength, today's what, Tuesday, right? So they have the inventory report at 4:30 Eastern Standard Time tonight. So maybe someone knows what's going on with inventory, and the number will be a little more fatter than usual, and they'll think that it'll put pressure on it. It's possible. And then tomorrow they have the 10 o'clock inventory report year over year. They put that out every Wednesday. So there's some, some data coming in from the oil market stats they watch. And we'll see how that goes from there. And it's pretty hard to imagine why anybody would be selling any oil in particular, really. Just because of the way the world is at the moment. I guess if anything, what's happened is that the recession is pushing down prices. All right. Where do we go from there? I just took a sip of water. So, from there we go back to the currencies again. And we look at the South African Rand as a tell on the metals complex. And there it is right there. There's the USD ZAR. ZUL. You can see here we're getting a little volatility signal as we speak. It is passing through the daily buy, and we've been in the weekly buy for a week. We closed in a weekly buy last week. Let's put that line in there for it. Matter of fact, I see we didn't put the sell in there either. There's the sell, and then there is the buy. This way you have a better idea. I mean, you can look at the numbers, or you can just look for the lines, or both. You can look at the histogram or so forth. And in this case here, you can see the daily pushed into a sell there. It fell down. Then we went into a weekly buy. And you can see it's trying to lift up. Now, when we see the South African Rand losing against the dollar, in other words, it's lifting up, we usually see gold going down. So let's tune into gold. We'll put it up on J4X. Right there. You see the pressure on gold. And then we take a look at it over on Chicago Quant Technologies. Like there. You see the same thing, the same type of pressure with all the red. A little green bump. You see the same green bump over here, like that. And now it's rolling over again. And you see we had a red dot there, and it tried to get through the line, and it failed at it. And you can see it's trying to get back into the weekly sell after a couple of weeks in a buy, which was interesting. Is we went into a daily buy here, and it didn't let go for this whole move, and we were stuck in a weekly sell. And we just kept on thinking, okay, this thing's going to back off, it's going to back off, and here it is, it's backing off. And then now it's moving much slower. I may have to shift around the indicator for the weekly. Usually a higher volatility is usually a higher number, and a lower volatility is a lower number. In this case here, I have to start thinking about going with just a gas line 3 instead of a gas line 3.5, which is a little bit faster. So. All right, from gold, we go back, and the South African Rand, and so we're seeing that weakness in the Rand, and we see the weakness in the gold. Now we go over to, where's it at? Currencies. Oh, we can close this. And then let's go to currencies again right there, and we take a look at the Japanese yen. Right there, there's the yen. You see it's climbing back up to like 27-year highs. It's in a down candle, but we got a green dot, and we are in a buy for the third day now. And at the same time, we closed in that weekly buy last week. Right there. You can see the pressure that we've seen from it. So you can see the we're dealing with live charts, and so you're seeing live data, and you're seeing real data, and then and you can see past data. And since we do this every day, then it's pretty hard to hide or create fake data. There we go. Now from there, we go to the south of our border, and let's check out the last currency pair that we watch. But we're willing to tune into anyone that anybody wants to see. So there it is, the Mexican peso. And the peso has been trading really well inside its range for years now. And you can see these black lines. It did drift a little bit with the inflation news here, about 3 months back. Dropped underneath. Notice it always bottomed on that area and lifted back up again. You can see we are in a weekly sell. We went into the weekly sell in here, and we were in a daily sell from there. Didn't need to move that. There we are. And you can see that pressure that was on it. And then we went into a daily sell again right there, and it was a nice little smooth move. We figured it might hit the bottom in here, but it didn't. It missed it. Went into a daily buy right there. Is that it? Right there. I think that's the buy. See how it says plot 1 is 0.0163 in that box? Whereas, excuse me, the day before, notice plot 1 is minus 0.0753. Remember, I created this mathematics to deal with the Higgs boson, or crazy name called the God particle. It's goofy and offensive at the same time. But so my numbers can get incredibly small since I used it to begin with atomic theory. But it works all right on currencies and equities and so forth and commodities. But you can see here we've gone into the daily buy by the hair thin of its chinny chin. And then next day, obviously, even with it in a weekly sell, it pops up. Now, we don't know if it's going to go do the challenge. More than likely, since we're in a weekly sell, I keep on thinking it's going to try to bounce along the black line here a little bit. So we'll just keep an eye on that. Let's see, what else can we talk about here? Let me see. Okay, so that completes the currencies. If there's no one out there that wants to see a currency, what we will do is we'll drift over to the metals. Let's see how... Oh, Robin, you see that? We moved over to December silver. So we showed you gold right there. And there is December silver now. It's daily. The weekly has joined in now. Looks pretty clean and clear with no problem at all. I guess we're going to go challenge these lows at this point. That's what the math is trying to tell us. Sad but true. Every time we think we're going to get some strength in the metals complex with, did anybody hear the word 8.5% inflation? You would think that these markets would actually react to it, but in these times, I mean, a combination of the derivatives. Let me go on an old rant, and that is that back in the old days, money managers would always keep capital on the side, and when they incorporated, they would say that they were going to have anywhere between 1 and 5% of gold at any given time in their portfolio to work, to hedge against inflation. And back in the old days, before they had listed options in 1976, there wasn't as many funds. They were mutual funds, and they were, different types of funds, but they were still money-managed funds, and those money managers had to incorporate and do the whole thing. So they had to follow their manifesto. And so their natural tendency was that when they saw inflation, they reached in. Instead of having 1% in gold or 2%, they would push themselves to, say, 3 or 4% in gold, which meant that there was buyers coming in. At the same time, since they didn't have listed options, they would lighten their equity position. So in other words, if they were holding 1 million shares of IBM or 1 million shares of AT&T, they may lighten it up to, say, 850,000 or 900,000, something like that. So in other words, there was actual buying and selling going on. And then you fast forward from Axe Houghton B in the 1920s to 1976 and listed options, and now there's the opportunity to buy a call or sell a call and hedge, and you don't have to automatically just liquidate your position and take a tax penalty. Because you're liquidating a gain for 5 years or 2 years or 9 years. And then they create puts about a year later. Going into 77, going into 78, they create the puts. So now you have calls and puts. I know I'm using scary words there. But So now a money manager goes, hey, how about if I go sell a call against my long stock, that million shares of AT&T, and I will sell a call against it, and at the same time I can take the premium that they gave me, and I can go hedge or put insurance on the downside. And that was basically the basic mechanics to markets for, centuries. Buying, selling, buying, selling. Now all of a sudden, you didn't sell your stock anymore, or you didn't have to buy any more stock. You just could hedge with your derivatives. And so that's what makes the markets function kind of in a totally different fashion compared to the writers, where they try to tell you about how much money they've made trading this way or that way in 1970 and or trading that way on the trading floor in a reactive environment, not the proactive environment we are in today. And not many books out there talking about today's trading. A lot of stuff you have to end up reading is old, like Graham and Dobbs and just all kinds of old financial, Jesse Livermore. You're reading old stuff in an era that didn't have calls and puts and didn't have derivatives and didn't have information at the speed of light. And so I always recommend to people, don't get trapped in reading old literature that doesn't pertain to today's markets. And that's the most important thing of all, is that you want to basically follow markets that way. And that's where we're at. Now, from there, where do we go from there? Let's go to, let's see, what time is it? We got about 5 or 6 minutes we can still do. So let's look at copper. Oh, we got that story about copper. Here's September contract, okay? And we've seen this big sell-off, and we've been saying over and over, we're just going to show it to you like that. We'll put it up on J4X at the same time. And we were talking about that, and I automatically blame the Chinese. It's like, China uses this stuff as like a gold, So today was an article. Let me go find the article. I parked it, so I'm not going. It's going to take only seconds for me to get the article. There it is, right there. And here it comes. And here's the article. One of China's biggest commodity traders faces liquidity crisis. Citing temporary difficulties in logistics, transportation, and product sales due to COVID flare-ups in China, one of China's most influential commodity traders is pushing for a government bailout as a deepening proprietary market collapse and ongoing zero-COVID policy the shutdowns have pressured many commodity companies as credit conditions tighten. Now the story goes on and on and on. In the end result, what has happened is that Make's chairman claims this is here's the company's there. According to people familiar, BHP Group, the world's biggest miner, is among the suppliers that are diverting shipments away from Mika, which is the Chinese company, for now. Additionally, Chile's copper producer, the biggest global copper producer, has reportedly paused sales to them also. And this is a chart showing, the slide or the sell down. And I thought it was interesting here. There was one more story that was says the company, which is historically has been, refined the copper accounts very small portion of the company's supply, but one wonders why he would be urging a government bailout. Okay, so anyway, where's that for the hiccup? The company historically has been in the biggest traders of copper in China and holds substantial amounts of metal in Shanghai. This is an interesting point right here. Bonded zone, the Shanghai's bonded zone, which is the center of refined copper trading in China. Copper prices have been rather more volatile in the last week or so, spiking as that company, Meike's news made headlines and tumbling after the Fed's hawkish, numbers and so forth. Where is it at? Here it is. Down here it says this year involving. It says in China, several alleged scandals this year involving missing aluminum and copper ore have further reduced liquidity to the industry. So they keep this stuff stored there, and it's not there. It's missing. And so when I'm not trying to beat up China. I never really try to beat up China. I'm trying to understand their, the stats, the numbers, the data, because we can't trust what they say, and the only thing we can trust is we can trust when someone is willing to import something into China or deliver it, or that you can see an actual point of sale and money and volume. When you can actually see those things, without a real liquid currency, we can't really see those things. And so it takes stories like this to be put out. Now, what was it? A month ago, I was back here when copper was in the $5 area for a whole year and then some. And we started to back off. I said, well, something must be going on in China. And we went and looked at the Chinese currency at the time, trying to figure out if there's something going on. Because you can't really tell. It's a fixed thing, so there's nothing there. But we kept on trying to look at China to see what was going on. We just assumed it had to be China. And there's finally the confirmation, about a month later, month and a half later, 2 months later. And again, our math in the end result, goes into the weekly sell here, and you can see it, breaks down, tries to get into the buy for this little bump, and then bang, we're back into the weekly sell again, and the daily sells, and it's in that daily sell for that action and with the weekly sell, and then it gets slammed. So our math reads that. Our math picks up supply and demand. It picks up buying and selling. It recognizes weakness versus strength before we see it. That's the amazing part, and that always cracks me up for the last 45 years. My math picks up the event in a very thin slice. It works, like I said, 8.5 out of 10 times on average, maybe a little bit better sometimes. Not any worse, that's for sure. So I find it fascinating that we thought it was China, and it is China. And there's the confirmation finally. And sometimes it takes months for us to see the confirmation because no one will talk about it. Remember? The U.S. media wants to tell us how China is going to be number one in the next 6 hours or 6 weeks or 6 months or 6 years. So, I myself look at the second largest industrial nation, or nation itself, or economy. The second largest economy in the world is the European Union at 21 trillion. To me, I'm just guessing China is probably 5 or 6 or 7. And I don't think that they're at 14 trillion or 15. I saw someone say they were at 18 trillion just recently, just because they lowered the I guess what they did, they increased the value. They're supporting their currency since it's a fixed currency. And so the world only trades like 2 to 2.5% of it a day. So there's no real looking at the currency and understanding the economy there. So imagine if it went the same way as the Russian CCCP, the old Soviet Union, where the ruble was stuck at 4.5 and 5 for decades upon decades, and then when they became un-Soviet, the next thing you know, they're at 13, and then the next thing you know, they were trading at 27. Okay, well, imagine if the Chinese currency went from 6 to just 10, and then from 10 to 14. Well, that would take their $14 or $15 trillion economy down to $5 trillion. And that's that is my opinion and my logic. All right, traders, Doc is out of here. Catch you tomorrow on Happy to Hump Day. So, happy trails to you. I'm the singing trader. Happy trails to you, to all our trading friends. All right, traders, catch you later. Arrivederci.